we look at the world and we see GDP growth, it's still strong, but we're living into a world that says the world is coming to an end. It's going to crash. Economically, it's not going to be a soft landing, it's going to be a hard landing. And now they're even using the word that it's going to be, a literal crash. It's not going to be a rough landing. It's like, boom, blow it up. So yes, if you look at what's going on in the world, you could anticipate that. But what I've seen over the past 2.5 years, you better be a little bit cautious about being so definitive or definite about what's going to happen, because with what's going on, there's lots of curveballs come our way.
Wow. Yeah, 100%. Totally agree. Now, a couple of things I want to talk about price drops because, we talked about interest rates. I want to talk about price drops because there's a couple of factors here. Number one, rents are still very, very strong and growing. Yeah. I'm seeing it in my various markets. There are some property types that have cooled off, but like single family homes, for example, during COVID, were like going like gangbusters, and they've come back to a much more normal, but they're still up significantly. And that's the same thing that goes with price drops. Yes, your properties, depending on the market you're in, some will have come down 5, some will have come down 8, some will have come down 10, 15% maybe, but that's far, Patrick, far from where they were pre-COVID. I mean, look at there's a chart. I want to pull it up here because it's worth hold on, I got to find the chart. One sec. Let's take Kitchener-Waterloo, for example, right? This is from February 2020 to July 2022. So this is like very recent data, right? Kitchener-Waterloo is still 44% ahead of where it was in February 2020. 44%. We're talking about 44% of hundreds of thousands of dollars here. These are significant gains. Even places like Regina, Edmonton, 16% ahead of where we were just 2 years ago. Just 2 years ago. This is phenomenal growth. So I think I need everyone to just calm down about their real estate values. Yes, they have softened a little bit, but man, they're still way ahead of where you would have been if there wouldn't have been a COVID. Now, again, people will awfulize, in my opinion, and they will say, what if it keeps going in this direction? Well, we're going to deal with that in a moment here as we talk about where this is heading. But let's talk about where we are today, which is a pretty damn good place. It's not so awful. That's my point.
Well, I think we have to expand on that conversation that you brought up, because as much as the price drop is only one aspect of all of it. We have to look at property type. We have to look at what strategy you engage. So if you're a buy and hold, it's a different conversation that we're having right now than if you were planning on assigning a pre-built. So that's just an example. So we look at the tactic that was being in play. This goes back to what we talk about with the real estate cycle, JG, is that where are you in the cycle and what tactic are you using and what's the best tactic to use in a real estate cycle. So having said all of that, what we're listening to right now is price drop. Primarily, it's all headlines, primarily focused on home buyers, first-time home buyers that got caught, and now their interest rates are high and their payments are high, and their mortgage buy down is far less, and their interest payment of that mortgage payment is way higher. The point is we can't just break it down and say price increases don't matter. They do, but it depends on, as an investor, it depends on the strategy you're using, because it's like you're the person that you're talking about that locked in their rates for 5 years. Right there, if their property is off 200 grand, let's just say, right there, number one, they've locked in for 5 years, which to me would indicate that they had a plan that they were going to hang on to that property for at least that long, which means to me that don't worry about what it is today, look 5 years down the road, and not even look 5 years down the road. Everybody's happy to, we talked about this yesterday. Everybody's happy to look at their capital gains, their unrealized capital gains, and be real happy about it, but they get really bummed out about their unrealized capital losses. So it's an interesting psychological dynamic that we play into. But it all goes to say, when we look at all these price variances, we also have to look at property types and strategies.